Good morning, this is Mayor Valensky with Driving Markets, driving while talking about markets. Let's kick off. So this week so far, the unemployment numbers, which is Tuesday, Wednesday, the employment numbers in the US, Tuesday and Wednesday, which were in the US on Tuesday with the job opening labor turnover survey, which is the JOLTS report, and that reports job vacancies in the US. That came in much lower than expected. So job vacancies were lower, which means there's a contraction in the available sectors, especially in the service sector. There was a major contraction and a fall in the number of vacancies opening. That is an indicator of where the economy is going, considering that job openings has been the backbone of the drive and the rise in financial markets since the pandemic. If you remember the labor shortages, which is what's been driving the market for the last 2 to 3 years, that now is coming to an end, and companies in fact are laying off more people than employing. On Wednesday you had the ADP, the Auto Data Processing, which is a survey of the non-farm payrolls private sector of 400,000 companies, and that gives you the data received from those companies according to their payrolls, again showing another unexpected drop or greater than anticipated. Then on Wednesday, and then on Thursday today, what you do have is you've got the jobless claims. The jobless claims is quite simple, an unemployment number. Now, unemployment is going to be rising in the US. You're going to have rising unemployment and you're going to have falling stock markets. Then on Friday, they've got the non-farm payrolls, which is a massive number, seeing what is going to be the employment number in the non-farm sector. So the whole week has been based on employment or unemployment numbers, and that is going to impact financial markets, because as you go into 2024 you're going to have rising unemployment and you're going to have a greater degree of contraction of GDP, gross domestic product, and a fall in overall production within companies themselves. You can expect earnings to fall amongst companies, and with rising unemployment you can expect a recession. We're already in an unofficial recession. If you ask any small business, what are we doing regarding business, how's it going, there's a major fall in the overall outlook. China had a slight increase in exports for last month. That was encouraging, but it's not going to change the trend. China is contracting and overall is going to be shrinking even more. The property sector is in shocking state, and a lot of overseas investors and funds are heavily invested in China. So how is China trying to come over that? How is it trying to combat it? What they're trying to do is they're trying to export their economic expertise overseas to Africa, Asia, Middle East, and Europe, etc., by winning contracts. Now, China is also trying to back the yuan with gold. So gold is being purchased by China, the biggest purchaser of gold next to India, which use it for jewelry. And they want to make the yuan gold backed in order to de-dollarize and to weaken the US dollar. And they've got this dream of making the yuan the reserve currency. It's not going to happen, but the fact that it's going to be gold backed is going to cause problems for the US, because a gold backed currency means that you're limited on spending, so you're going to control inflation, and you're going to have solid growth with the currency itself having confidence and faith, where the US has no gold backing whatsoever, and therefore the Fed is free to print as much money as possible, and they will have to do that next year when the regional banks fail in the US, and they will fail as you look at different sectors, especially things like freight and trucking and transport are significantly down, and as a result of being down, they are down on their loans, and therefore they're going to be in more debt to the regional banks on their lease agreements, and the regional banks are going to have to repossess or write off those loans. As a result of that, the regional banks are going to need bailing out by the Fed and by the US Treasury. So you're going to have a whole array of activity happening in 2024, but overall markets will go down in 2024, contrary to many opinions. They will go down, and we could even see a significant crash, which I'm expecting in 2024 as a result of rising unemployment and a recession. You can catch me also on Instagram. You can read my books on Amazon. Hope you enjoy the channel. Share, subscribe, comment. Mayor Walensky with Driving Markets. Have a great day.